Well, good morning and or good afternoon, ladies and gentlemen. This is your host, Robert Roy. Hope you're having a wonderful day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in the questions box to let me know that you can. I would truly, and I do mean truly, appreciate it. Thank you, thank you, thank you, thank you so much. It is an interesting Monday to say the least, Rich. Let's just say that I am very Amazon happy today. How about that? Morning, Christopher. As well, Deborah, how are you, dear? Very, very, very good. Good, good. Robert, hope you're having a great day. Fantastic. It certainly has been an interesting one, and we're going to get into that a little bit this morning. Morning, Helen. We're going to get into that a little bit this afternoon, I should say, of S&P and where it's gone and what's happening. And okay, Rich. Well, I mean, Amazon is. I'm telling you what, I am tickle pink over Amazon. We took our second exit today of out of power option plays, and I'll share that with you guys after. Let's see. All right, so let's go ahead and jump in. So, guys, Trading You coming up on December 20th, which would be this Thursday. It is the closing Trading You to that live class we taught, which started out to be a live 2-day workshop, turned into a live 3-day workshop with the number of hours that we put in there. The next Monster Market Move is coming up on January 16th right now. Power Hour each and every Monday except Christmas Eve and New Year's Eve. We're not going to do it either day. You guys get a break, we get a break. We'll come back refreshed for the beginning of January to get things rocking there. Tonight we will be going into E-mini Think Tank. I am definitely excited about that. We've had some great weeks the last couple of weeks in there. Power Options plays. I'll share with you the results in just a little bit. Guys, here is the follow us page in case you, and I do have some names that I've seen here that I do not recognize. So if you're not following along with us, by all means, please go ahead and do. Here's the way to do so. We appreciate you all, and comment, like us, share. I mean, all of those things are helpful, right? Pretty soon I'm going to be putting up here, guys, particularly for those of you that have been to the, and I'll just say it out loud now, those of you that have been to the Whistle Stop in New York, those that are coming to the Mastermind Group in New York, I need you to go to Yelp and look for Wealth Builders HQ and give us some positive, 5-star rankings up there would be wonderful. Since we don't do a lot of walk-in retail type people coming in there, it would be nice to have that feedback from it. All right, so let's go ahead and I want to jump in on the S&P 500 right now. So what happened? Karen, I appreciate that. Thank you so much. What happened today? Well, if you look at what happened on Friday, we closed on Friday right at that 2,600 level, a couple pennies off. I think it was a few cents. Closing price was 2599.95, just a couple pennies, 5 cents off of that 2,600, but in the zone of 2603 to 2569, right in there. We came down today, and opening price on the day was 2589. 2584 is our fib line, right? The very dark black line in there. But we are at a major, major, major cusp right now. Last update, it's been a little bit of a while since I updated on Trade Nav, so let me just do that now. Right? But you can see it stretched down to, the bottom of our rectangle, this yellow rectangle here on the left. It stretched down to the bottom, and it snapped back up, giving us that little hammer type pattern in there. If you go ahead over and look here at S&P 500, we're only down $1 right now on the S&P. So here is the gap down, and we've come back up. We closed the gap, came back up. We're retesting it all over again, but we pushed down again to that 2567-ish level today. Just did not want to wait for Trade Navigator to do a final update there. It's taking a long time. And you can see we bounced back up in there. But that 2584 is the catalyst, and actually the note that I sent out for Sean to put on Twitter this morning. If you guys haven't seen it, it's too bad because it should have made you a lot of money today. The S&P gap down to the 2584 level yet again today. This level is a catalyst for a bounce or a break to major fib level. Keep your eye on it. Guys, we got bounced off of there, and there was great intraday setups to be taken right off of there. Nothing I would be holding overnight, but tons of intraday move that you could have picked up from when that tweet went out until right now, so and then beyond. So we've had the same thing happen, yet just 5 days ago, right? On the 10th, 5 trading days ago, on the 10th, we snapped down, 2584, we bounced. I love that we got down lower today. The key is going to be what happens as we get back up into this downtrend line. If we can break and come on the inside, come back on the inside of that downtrend line, or is this going to hit the downtrend line and fail? Karen, this would have been on Twitter this morning. I texted it to Sean to post on Twitter this morning. So no, it wasn't market alerts. Right? So guys, a lot of stuff happening there with this downtrend line right now. Let me extend to the right just for now. Right? So I want to see as we're getting in there, because what's happening is this. We're getting into more of that convex, that cone that's setting up in here. So right now, we came down in here, we went back up, we're back in here. This dimension is getting smaller and smaller between the 2584 and the downtrend line. We're looking for the breakout, right? From there. If we get the break to the downside, that's awesome. If we come back up inside above the downtrend line, that just means we've got to look at a different potential setup in there. It's all that is. Excuse me. That's all that is. We've got to look at a different setup. We're not there today. What we are at today is we're below that level, and we're looking at where does it go next, and it is that downtrend line. Now, the 2600 was the high of the morning, 2600-ish, right? Let's see. Remember, this is a few minutes old, 2601.13, right? So, guys, we're right there. I mean, we're just playing around. You could see the value of these lines in there are just astronomical. Just phenomenal potentials in there, right? And we're hanging out right at that 2600, 2598, 63. I mean, we are right there. Could be a morning star, Robert. Yep. That again, that hammer type pattern structured or set up in there. It is there's a lot of potential for a short-term bounce, and I'm still of the belief that we are not there yet for a major crash. I think again, I keep saying it, much closer to the end than the beginning of it. When I say end of the bull run than the beginning of it at this point. But we're in correction territory. I saw something this morning on CNBC that the Russell was in bear market territory. Didn't test it, didn't check it, didn't look at the numbers to see if that had a 20% drop. But guys, we're there. I mean, that 2584 line is all of it. And if it weren't for interest rates being as low as they still are at this point, I would be much more concerned than I am now about the market conditions. Yeah, very possible, Deborah. Yep. That'll change on Wednesday. Wednesday is the big Fed day, is it not, Trip? Wednesday is 2 and 2:30 meetings, right? So, guys, you should make sure you're checking out the report that I do every week. Over the weekend, I go into and I do a video on YouTube. We post it. Let's see. There we go. That's a more better. So FOMC, 2 o'clock, we've got the economic projections, the statement, the funds rate, and 2:30 is the conference. Jerome Powell, open mouth, insert foot. Excuse me. I'm almost wondering if he's not Janet Yellen's brother, right? Or distant cousin. He still doesn't seem to have learned to control what comes out his mouth. So, and he's driven the market more than one time with what his speak is. We'll see, where it all goes. But that's the only major report this week. And we've got on Friday a little bit the final GDP and the durable goods. The month-to-month, quarter-quarter. Nothing crazy. Karen, yes, the one I put on YouTube on Sunday during the week. Excuse me, on the weekend. I think this weekend I put it up on Saturday. I wasn't around on Sunday this week. It was Daddy-Daughter Day. We got with my oldest. I got to spend a little bit of time. And just log in here to Wealth Builders. Yeah, so I don't know if I have a picture of it here, but she posted on Facebook. I went with my cousin and I with our oldest daughters. We took the four of us, went out to a range in New Jersey, right around the corner from you, Rick. We went out to a range in New Jersey, and you're able to fire a handgun even without a handgun license. So they got to fire. I brought my Glock, and we rented an HK VP9. The two of them held up their targets, and we took a picture, and my daughter posted it on Facebook, and it said, although our dads don't mind going to jail, you better watch out for the daughters with their shooting capability or something like that. She was good. Both of them did a good job. Yeah, I have one too, Trip. I have the H&K. Same one. Yeah, so guys, be careful with what's going on with the Fed reports coming out on Wednesday, right? But that is that came out on the report that I do over the weekend. And I kind of try to clue you guys into it. And if you go to the TV page, I put the link in. As soon as I upload it, it goes on the market review, and there it is. Will the S&P hold its major support level? Right? It's right there. So in the weekend email we send out, it's a reminder of go check out the video. All right, a lot of comments and questions came in here. Let's see. Demetrius said Jeff Grundrich on CNBC Trader Talk predicting this is the first leg down and the second leg will be much more severe. Yeah, and did he say when, Demetrius, he thought that second leg was coming in? Exactly, Judith. Early next year. And Demetrius, I'm thinking second, third quarter next year. So we're not that far off, and nobody really knows. The problem is, does anybody know what the interest rates are right now? Where are we at interest rate? What's our current rate? We're about 3 and change right now. Is it 2 1/4 inch? Three is the 10-year. Guys, here's the point. It's nowhere near the 5.5 to 6 that we need to see that it has gotten to in the last two major crashes we've done. And it's the catalyst brought it from 2 to 3% to those 5 and 6% numbers in a 2-year period of time, in under a 2-year period of time. So the interest rates aren't there yet. The market, is a house of cards. Politicians are lying out there tookish about good and bad, right or wrong. Again, I don't care if you like or dislike the president. The only way to like or dislike a president is to just get rid of all of them, right? None of them are really any good. They're just not. I'm going to stop. Okay. Anyway, we normally want to see interest rates get up there for that kind of drop to take place. All right. The problem is we're not there today. We haven't seen those rates up there today. So 2 1/4 on September 26th. Benchmark rate is indicator of the economy. The South Federal Reserve signaled it would raise to 2.5% on December of 2018, which is now this week, 3% in 2019, 3.5% in 2020. But they were originally talking about 4 hikes in 2019. Now, again, we'll see what the statements come out of Powell's mouth. He's backed off a little bit. Yeah, politicians. There you go, Michael. It's just that. It's politicians. Yeah. And Dimitri, that's all part of the game, right? We'll have a new president if we get the bearish market in 2019 to 20. It's all part of the game. It's exactly what it is. The president gets blamed for it, right? Where it's kind of like a new job, right? When you take the new job, you can blame the old guy for a couple of months, and then after that, it's your fault. Even though there's all the problems we try to fix that haven't been fixed from the old guy yet, it's still your fault. Yeah. How do you know they're lying? Ha ha. Their mouths are moving, right? That's how we know. Let's see, make sure I didn't miss anything there. All right, I think we're good there. So Dimitri said, Rob, what role do you think the trade war with China will play with the markets? So Demetrius, when I teach, and again, I still teach for another company. I still teach private seminars for them, private workshops for those guys. When I teach for them, I talk about every single time, the last 2 times we've had a major drop, they've been catalysts, right? 2000 was Y2K, right? And then, the internet bust, both of those. And then 2008 was the housing bust, right? 07, 08. So what's the bust coming here now? The expectation is not even the US. The expectation is it's going to be somewhere around the world, around the globe, not necessarily US, certainly not a requirement any longer, particularly because we are such a very heavy global economy now. When you have companies like Starbucks opening up new stores in China at the rate of every 13 and a half hours when they first started opening in China, a new store was opening up. All this money getting dumped over there, and if their economy is a house of cards and they fall apart, Starbucks falls apart, and it just trickles or floods all back into the U.S. I do believe, Trip, we'll get to that one in a second. I do believe, Demetrius, that the arrest that was made with one of the individuals from China and some of the concerns on the trade war will have a bearish effect on the market. You look at the last 2 times we've dropped, and it was a 47% drop and a 53% drop or 56%, something like that drop. The expectation is at least 50%. There are some major gurus out there that are calling for massive drops. I think the drop could be as much as 73% to the downside. The question is, are you prepared for it? Are you ready for it? Are you doing anything about it? And for most, the answer is no, they're not, right? They're not protecting what they have. They don't know how to protect what they have. Guys, those of you that are in the mastermind group, we are actually going to spend one of our earlier lessons on how this needs to happen, because you need to A, know how to protect what you have, B, how to learn to capitalize on that move, because it is expected that this upcoming drop, it's going to happen. It's not an if, it's a when. This upcoming drop will make more millionaires and more billionaires than any other time in history will be made from the next market drop. Right now, it'll also make more people in the poorhouse. Because from anywhere, right back to where we started in 2008 when the markets crashed, as far as 401ks. And then Tripp said, what about Brexit? Absolutely. No negotiation of the Brexit, a no vote of confidence for Lady Ding Dong over there, right? Yeah, it's going to be a massive shift of wealth, Robert. You're right. But let's analyze those words. Shift of wealth to who or from who? From those that are poorer, middle class, right? To the wealthy that know how to capitalize on this stuff. That's where most of it goes. The question becomes really, are you going to capitalize on it for you? Even if you're not in that upper echelon of the wealthy. Right. There you go, Trip. From the market uneducated to the market educated. Exactly. Um, okay, let's see. Dimitri said, interesting. Hadn't thought about that. The UK could domino with a hard Brexit in March of 19. See, there, and again, there's where all of this is coming into play, Demetrius. Notice you've got China with this finance minister or whoever this guy was that they locked up, they arrested during the G20. You've got the belief or disbelief that China really is giving accurate numbers, right? Because we have no real control or say over that, right? So are the numbers inflated? The belief by many, 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 many in the know say yes, they are, right? Then we add what's going on with Brexit in there. We add that our economy is nowhere near as strong as people seem to believe it is, right? I understand that, unemployment rate is good and all that, which again, that is another lie in and of itself, unemployment rate. Because I have a buddy of mine that now for 7 years ain't been able to find a job. Not by lack of trying, but by his age and his industry, they can hire 3 guys for what they pay him. So he ain't getting a job. But as far as the government's concerned, he's not unemployed any longer. All right. So there's, Demetrius, again, all of these pieces of the puzzle coming together. And when we hit, man, that's going to be a massive shock. And I do not believe it's going to be one that gives us a lot of time to think about it. I think the move is going to be hard and steadfast. Eesh. All right, so if you look, forget about all that mess up on the upper right-hand side there. Guys, look how fast, how hard, how vicious that was. Right? So Tripp said arrested Meng Wanzhou, the chief financial officer and deputy chair of the board of the Chinese tech giant Huawei. I thought Hawaii was owned by the U.S. And anyway, let's see. Demetrius said, Rob, the problem is that the market crash will probably usher the far left into political power, which would have devastating consequences for traders. Higher taxes, regulators, traders, transaction tax, for example. And, it's all possible. I mean, I'm not saying it's all going to be good and cheery, right? It's all possible. And the thought that that's going to hurt the wealthy, it's not going to affect them the way that people think it is. Yes, will the wealthy pay more? Yeah, they will. But you know what? The average person is going to get hurt much more than the wealthy is because they can't afford it, where the wealthy who's making all that money can afford it. They can deal with it. Sorry, Rich, who? Have I taught who to trade? I didn't see when you typed it in, so I don't know. That was 2 minutes ago. I don't even know what I was talking about. All right, so let's go back to a daily chart. Oh, my friend out of work. Yeah, he's not interested. He's got an issue just using the computer. He's a little bit older. He's at retirement age now. He's done. He's done. I feel for the guy. I do. He doesn't want to learn it at all. But guys, I'm all about teaching people how to do this stuff. My daughter's friend is a PA. She's out of college. She's working in a hospital somewhere. She does okay for herself, and she has asked my daughter 3 separate times, please, can your father sit down with me and show me a little bit about the market? So I think, because I leave tomorrow for Florida, I think that when I get back, I think that this Friday is when I'm going to see her. So her and I can sit down and go over some of that stuff. Yeah, here, Lawrence, laying off the old guys. I get it. All right, so guys, I mean, here we're at. Let's see what's going on. All right, so we got a little bit of a fail going on in there right now. We've got a double top, double bottom, little channel happening there in the SPX. Keep your eye on it. Let's go put this dreaded box of neutrality. We have not used that phrase in a while. Right in there. Right, and if you go ahead and look and set up your SPY chart, I don't know how much is inside of this range. Not a whole lot. Pretty tight. Right, but look at this move, guys. We're looking, forget about moving averages. They mean absolutely nothing at this point. We're looking for a break of either one of those levels. It really doesn't matter where. It just needs to be a break. We got the gap fill here. We came back and double topped it right here. Double bottom right in here. Is it going to hold or is it going to break back down? Yeah, Rich, here. I'm a big fan of helping them out. You know, either of my kids, if their friends want to learn, I said I will be more than happy to teach them. So with ascending triangle, oh, where'd it go? Hold on a second, guys. Something just froze. Give me a second. Give me a second, guys. Let me fix this. I should be coming back. I don't know why it froze. TradeStation just went wacky on me. Anyway, if we can get the, we were talking about the kids. I'll teach any of my kids or their friends that want to know. I'll spend as much time on it as possible. My family, I mean, guys, people are going to get crushed in this. Now, the good thing is I manage all of our own stuff, of course, and I co-manage mom and dad's. What does that mean? I mean, I'm not making the final decision. Mom or dad have to say yes on a phone first before I get to say do something. So no one can ever blame Rob for taking their money. But none of us own any mutual funds. The only mutual funds that anybody owns is my oldest daughter, because her company that she works for has a 401k and she's contributing, and that's the only choice they have. Cannot self-direct. And there's not a whole lot of money in there right now, but we talked about how to protect it and what to do with that. Let's see. Oh, ascending triangle for the day. Trip is saying. Okay, so, well, I'm seeing this trend up here, Trip. Right, but we violated that. Is that what you were referring to, or were you trying to move it? I'm not really getting it down there anywhere. So there's the break to the downside, guys. Yeah, there you go, Rich. And that's really what it's going to come down to. Rich had got Patricia and Chris and Pete signed up for Trading You. Yep. And the great thing there is this. In the newer component of the Trading You, after the 60 days you guys have of all of the training after the live is done, we're going to start we're going to start new live sessions in there every week, or every month rather. We're going to have 2 hours of live training in there. We'll have actual training. And then on top of that, we'll have Q&A sessions in there. Through part of that 2 hours a month. So you'll be able to ask some of these questions in there as well. So as the market starts to crap out, you'll be able to start working with them. Let's see. William said, been stuck working last 25 minutes. I'm not sure, William. We'll get it up as soon as we can, probably tomorrow. Rich said, I got killed on mutuals in 2008. I learned I couldn't close them until the market was closed. That's exactly right. That's exactly right. You're stuck. Mutual funds only trade on the close. Mutual funds only trade on the close. So Amos was asking on the market alerts this morning. So the market alert, we talked about the unpredictability of the market with the holidays, right? Watch for a morning high-low breakout on a 3-minute chart. So on those stocks that we had listed in there, Amos, we're looking for a breakout on the highs and the lows of the morning. So we have, here's the lows, here's the highs on the S&P. We're looking for the breakout of one of those two levels on those three stocks that we sent out as a potential entry point for breakouts from there. Almost the way that I do my power hour setup. So if this were, just to use an example, if one of them were Apple, right, we would literally draw a rectangle on the morning's highs and lows, right? And what time did I send that out? What was the exact time of that? 10:45. So we're looking at that first hour of time in there. So till about 10:30. So right about up in here, right? So we look for a move within that range, right? We've had the 9:30 to 10:30 lows to highs. We got the breakout, but not a retest. Let me do this. So looking at 3-minute candles, right? So we got a breakout, came back and bounced. The retest is the move up right in here, right? So that's what we're looking for, particularly if you have something like a confluence with the moving average, right? On those three particular stocks. We're not looking, the way the alert was set up was not for, this may be the wrong color, but not for inside of here, which is where most of the mess is going to be today, is inside of this. All right, let me clear that off. Cool, thanks, Trip. I don't know, Marcus, what program was I talking about? Sorry. Again, I'm on, I'm trying to answer 11 different questions in my head. So, Rich, a very, very particular trade setup that I trade is called the Power Hour. Power Hour works off the 9:30, 10:30 highs, right? One of the things we'll talk about when we get into the, more than likely, one of the live sessions, we'll have a couple of different intraday or directional type strategies in it, where the other three will be all cash flow strategies. And the Power Hour setup allows for an intraday setup. Just like this, where you identify the highs and lows of the first hour and you wait for the breakout. Because if you take most days, now, when I say most days, remember, if you have a day when the market is just insane, all over the place, it's tough, right? So if you look at the first hour's high to low on Friday for the first hour of Friday on Apple, most of the day stayed inside of that rectangle. That's kind of what I'm referring to there, Rich. William, did I answer that question? Because I haven't got to it yet. Did I answer it? Yes? Okay, cool. Oh, okay. So the 2 hours additional. So Marcus, in our Trading University, we had offered it at, Amelia, I know you're here. Can you just type in, actually, can you drop in links, Amelia, for the Trading U, both the annual and the lifetime? So Trading U, when we first offered it, was just very inexpensive, guys. And that's just me with early bird. That's just how I do things. And we offered it $358 for the 2-day live online workshop, right? And then you were going to have 60 additional days after the last class was taught to go back and watch it all. So there was plenty of time to go back and watch things. The last class is coming up this Thursday night. Will be the last one we do. After that, we've already offered to individuals the lifetime and the annual option for those programs, right? For the Trading U. Now, once that starts, which would be 2 months after, so December, January, February 20th, right, is when it'll start. Once that starts, from there, there'll be 2 hours a month will be included live, will be included with each month's subscription, that we're going to be in there doing training, and we're also going to answer questions throughout the course of that 2 hours. So let's say we did 2 1-hour sessions this month. 45 minutes of it would be us training on something. The last 15 minutes would be Q&A, right? So That's what I'm referring to there. Does that make sense, Marcus? Yeah, William, it's going to be a lot of fun. I'm really looking forward to it. I am. Cool. All right, good. Good. I don't remember who I was explaining this rectangle. Rich, I think this was you. You good on this rectangle, Rich, on what I'm referring to in there? Yep. Okay. Fantastic. All right. So let me get rid of this. And again, I'm just using it as an example. There's a lot more to it than just that. You're welcome, Rich. Okay. So guys, let me flip over. Let's go back over to TradeNav. All right. I'm going to do another quick update time-wise, and let's see what it looks like. No, do not do that. I just want to get another update going in here, get this started. For those of you that stepped in late, which, we had a couple that weren't here when I first started, this will be the last power hour of the year, right? So here we are, December 17th, Christmas Eve, New Year's Eve. We're going to leave them for family days, not just for us and those in Wealth Builders, but for you guys as well. All right. So enjoy today. Now, this is interesting. Let's go back for a second. We're down 18 points now on the S&P. All right. Let's do SPY. Let's go to a 5. I mean, guys, look at this. Off of this top there, 260.5. We're at 258.5. $2 move off of that top. Moving average cross, retest, all of those things in there. Good. Okay. All right, Pete. Good. Glad you got it. All right. So let me bring us back over here. I definitely am liking that little spinning top tight candle in there, right? Because I don't necessarily believe we're done going down. I think, guys, here's the issue. Since we've had this breakdown, actually, let's go back and look at this year, right? This vertical red line right here on the far left of the screen, right where my mouse is now, that is December 30th or whatever it was last year, 29th, December 29th, okay? This faint grayish line at 2673.61 is closing price. So we've violated the closing price, meaning we're trading lower than it. So all the gains from this year have been given back. Right? They've all been given back. As we press down, we bounced off of this 2584 1, 2, 3, 4, 5, 6, 7 days, not including this week, not including here, right? This right here would be 2, right? 1 and 2, right in there, right? This here would be, and this cluster, that would be 1. That makes it 3. That's 3 more. That's 6. And this was number 7 right there, right? So those 7 times we stretched down to the S&P, the 2584 level, and we bounced. Not really seeing a close below it. So strength is definitely there. There's not a question. And the strength is there because people don't even know why it's there, but it's a fib number that's causing it to happen, all right? We truly need some capitulation, some massive fear to step in a little bit, and we need to close below. And we need to close below and a push down for a couple of days. We need to just shake out the looky-loos that keep bringing it back and testing it and popping it back up. Bringing it back to test and popping it back up. Enough with the dang test. Break the friggin' line. Close below it. Give me a couple days below there. Forget about where it goes to. I'll trade it to wherever it's going to next. I don't care. What I do care is it's going to happen. Get it out of the way. It's the $150 price per barrel for oil. We finally rang the bell with no rhyme or reason. They made it very clear, the oil traders, they were going to run it up and bring it right back where it belongs just to get people to say, we did it. We did it. Right? That was the whole purpose behind it. No different here. We need to be able to say we did it. Right? We can go further back, and we didn't really have any concerns. We weren't that high, right? That major run in the latter part of 2017, early 2018, we've given all of it back. Guys, I mean, if you look, let me go ahead and, no, we don't want 14, I want 16. $12.30 right there, right? We're not making it down to the previous year's gains to get back to 22.56. 22.56. We're not making it that far down this year. It's not happening, right? I don't want to go that far out, right? It's no way we're giving all that back. It just cannot fathom that it could even happen that quickly. But guys, we're giving back major amounts. And if you take out 2016, 2017, the gains of 18, guess what? We took out a major chunk of the gains that we brought back in, just there alone. Let's go back to this. Nope, too much. All right. I'm going to delete off the arrows. Okay. Amelia, on the lifetime and the monthly, what did we do? I mean, the annual, what did we do as far as a date? Diana's asking what the expiration was on the numbers, on the tools. I don't remember what we put on them. Amelia is awesome with this type of stuff, Dan. She's much better than I am of keeping track of that. Rich said maybe we should just own long-term puts on the S&P. Here's the problem with long-term puts today, Rich, is they're all overvalued. I mean, the market makers know that people are buying them for the exact purpose of the why. Hey, man, we need to protect the downside, so the market makers jacking prices up, right? High VIX, right? There you go, Rich. Yes, VIX is way up. High VIX, high fear, high options prices. That's an issue. If we look at the VIX, all right, VIX is up nicely. Good move up. Nice pullback. G. Pullback was right to about 618, and then we bounced. We came back to the 50. We're at a 2 standard deviation move. Yep, always buy an umbrella on a sunny day. There you go, Rich. Well, yeah, Trip said selling, and Amelia had typed in Indeed. Absolutely, Trip, you're right. I mean, we're selling that higher premium. The biggest problem is we've got the whipsaw, right? We're supposed to be happy right now. It's Santa Claus rally. Things are supposed to be going up. Everybody's happy. Life is good. It's not where we're at today. We're at 17, right? 17. We've got 2 weeks left till the market is over, till the market is done this year. All right. Guys, look, if you look at Amazon, all right, look at that gap down today on Amazon. Now, I'm going to share with you guys the power option plays. Let me make sure I'm sharing the right sheet. I am. Okay. I'm going to share with you guys. This was from Sunday, Saturday, whenever I did it. We've got these trades right here are all open. Actually, right here are all open. The bottom two both closed out. We made money on one. We lost money on the other. Okay. Apple, Baidu, we're up money on all of these. Amazon, we're up 6 grand on our 2 contracts, right? Biogen, a little bit of money. Booking, we're up a nice amount of money there, 6 grand. Also, we have 2 contracts left. Well, guess what? Amazon today gapped down, and right about 1557 is our exit today. And so what was the closing price? Opening price. 1566 was the opening price. Wait, what did we say? 66. The low was, yeah, so it definitely would be off of not on the open, but on the move down. So at 1558 is where we're out of this trade. So let me plug my numbers in. Just not going to bother putting in a date. Actually, we will. 12/17. Just plug the options in here. So we sold 1 contract, just 1 of the 2 we had, and we're now up $12,000. Deborah said, are you straight puts on the power option plays? Deborah, all we do in power option plays are buy calls and buy puts. I do have some traders that are in there that will use it for spreads and do things like that, but we just talk about purely going directional because we're looking for the home runs. Now, listen, $12,000 trade. Guys, is a $12,000 trade a home run? I guess it depends who you are, right? I'm not saying it's not a great trade, and I'm not saying that as an individual, some individuals that may be a home run, right? To me, $10,000, yeah, a ground rule double, okay. It's a good trade. I'm not discounting the trade. I would never, ever, ever do that. Never do that, right? But there's a $69,000 trade on Amazon, and it took us a whole whopping day. If you need the profit, it's a home run. Okay, all right, Roman. There's an idea. I get it, right? We get our share of ones going against us and smacking us around. And there's a Google. Google seems to be our nemesis this year. Another 6 grand hit on Google. A little bit on Baidu, nothing crazy, right? Our trades aren't nutty, profitable ones. I mean, here's $9,000 trade on Google, right? 8,000 on Netflix. Here we go. Amazon. Amazon's the cream of the crop this year. We're killing on Amazon, right? 35 grand on that Amazon trade. It's $100,000 between 2 Amazon trades right there, right? 2,000, 3,000, 5,000, 6,000, 35,000, home run. 69,000, home run. 12 grand, not too bad. Amazon, $75,000. That's our biggest trade of the year. 75 grand. We lost 5 grand on Amazon here. We made 10 grand here. Anyway. Yeah, Rich said, me too. I'm down on Google this year. Yeah, it's not been a very cooperative stock this year. Did we have an $80,000 one in there, William? We might have. So when I finally get together and start calculating it. Not sure. And I'm already back into January. No, I don't see it. But listen, guys, we need in power option plays, we need about 7, 8 home runs a year to hit our numbers. That's just the way it works out, right? For us to get our gains that we want. But that's where we're at right now. The goal is 1.2 million, and we're at 1.248 million. So when someone says, Rob, is power option plays worth it? Oh, I don't know. Would that? And we have 1 contract left on Amazon right now, right? If we close that 1 contract out right now, we'd have another 6 grand on this. We'd be at almost 20 grand. All right, let me move that out of the way. Beautiful. All right. Guys, I've got time for just a handful of candidates today. We've spent a lot of time going over other stuff. All right, Trip. So with Micron, they've got earnings coming out. Hard to pick where they're going. If the pattern, the bias holds, we're looking at 28, that on the downside. I'd want to see the earnings come out first. NVIDIA, I like NVIDIA. Let's pull that out a little bit. Right down to about 130 is my next target there. IBM, about 114. So Lawrence, to do every trade we did in power option plays, meaning all the Googles, the Baidus, not Baidus, Google's Booking, which was earlier this year, Priceline, and Amazon, to do those three companies, we used about $240,000. That 1.2 million is not the account value, that's the profit on the account. If you took those out, I think you needed 70 to 80 grand if you took those three companies out. But now you may say, well, Rob, I don't have 70 grand. Great. So if you had 7 grand, you could have done 7 or 8. You could have done one of everything that we do instead. Oh, maybe, Jim. Good catch if that was the case. Let's see. Did I make a mistake on the date for Amazon? Oh. On this one right here? Oh, I see. Right here. Yeah. 12/17. Okay, there we go. I appreciate it. Thank you. Thank goodness that day wouldn't affect us much, but good catch on that, Jim. And it doesn't really matter because I'm going to undo all of it anyway, because we'll go through it in the power option plays itself. So the lifetime increases on whoever had asked that question before. I don't remember if it was Deborah. On the pricing, sorry, that's way off of my page at this point. The lifetime goes up on December 20th, which is, we set that. Oh, because we dropped it back down, Amelia. That's why. We set that. We had raised it, and we gave the group the opportunity to the last class, which is the 20th. It'll go up on the 20th. So after class on the 20th is when it goes up. So figure the 21st. This Friday is when the lifetime goes back up. But it's an amazing price, right? Right, so EW, Edward Life Science. Kim was asking for that one. And so, guys, you really got to focus on the alerts that we're sending out. I think we're up a little over 8.5% or so on the ones from today. So, and again, this came in last week on the 11th, I think it was 11th or 12th. I don't remember the exact date. We just did a spread on it, right? And we're up 16% in one day on EW on a spread, right? Intraday spread set up, and you can tweak it to make even more with it. But guys, the market alerts, I'm a big fan of take advantage while you can, right? So the market alerts are now at $99. So I know many of you took advantage of them. We went from $79 to $99. Still a great discount at $50 off. We will get it up to that $149 price. We'll kind of work it up there. But take advantage of them, guys. You got a 2-week trial. Today isn't the decision. The decision is 2 weeks from now. Do I keep it or not? Right? So, cool. Ladies and gentlemen, it seems like for some of you, this will be the last time we get to hang out this year. And then we'll get right into Christmas holiday, into the New Year holiday. And I will see a lot of you still in power option plays, still in E-mini Think Tank and so forth. But Covered Call Explorer, Trading You this week. But for the most part, for many of you, this will be the last opportunity we get to chat. So with that, I wanted to wish all of you if you celebrate Christmas, an awesome Christmas for you and your families. Everybody have an absolutely phenomenal new year. And the question I really want you to start writing down, guys, and answering is, what will you do different in 2019 than you did in 2018? That's question one. Question two, what are you going to do to protect yourself in your portfolio? Question number three is, how are you going to capitalize on the markets for 2019? How are you going to take advantage of it differently than where you may have gone this year, right? Thank you, Patty. We can use that for my dad. I appreciate it. Yeah, if it wasn't for bad luck, there'd be no luck at all, guys. Is what it seems like, family-wise. My mother-in-law's sister passed away yesterday, 2 days ago. So it has just been, we're looking forward to ushering in 2019. So with that, ladies and gentlemen, you have a great rest of your trading day today. God bless. And I will see all of you somewhere in the next couple of days, if not in the very beginning of the new year. Take care, ladies and gentlemen. Have a wonderful rest of your day. See you all soon. Those of you that I've got appointments scheduled with today for our one-on-ones, we'll be starting those in just a little bit. All right, take care, folks. See you soon then.